Hi friends. Let's understand concept of personal finance today.
Personal finance is the financial management which an individual or a family unit performs to budget, save, and spend monetary resources over time, taking into account various financial risks and future life events.
How to manage personal finance? This is a crucial question for all. Sadly, no schools or colleges teach us this. We are told to get a degree, get a job, and then everything will be sorted out. But unfortunately, it is not that simple. For becoming successful, something more is important, that is knowledge of how to manage money. Let's try to understand few areas of personal finance like budget, insurance, tax, savings and investment, contingency fund and credit. Let's start with budget. Preparing a budget for financial planning is critical for achieving your personal and family goals. One needs to identify what are his needs and wants and make budget accordingly. This helps to plan lifestyle, pay bills, and to ensure one has enough money. Another important part linked to budgeting is that the budget needs to be tracked. The person needs to track his expenses and to ensure that he is not spending over the budget. Emergency fund. Emergency funds are those which can be used in emergency situation like losing job, medical emergency. Ideally, one should have at least 6 months' expenses or more. Managing debts. One is not expected to spend more than earning to keep debt from getting out of hand. Of course, most people have to borrow from time to time, and sometimes going into debt can be advantageous if it leads to acquiring an asset. Leasing sometimes can be more economical than buying the property. One must keep check on this. Credit cards are primary vehicles through which credit score is built and maintained. Watching credit spending goes hand in hand in monitoring your credit score. If you want to obtain lease, mortgage, any other type of finance, you will need credit report. Factor which determine credit score are payment history, amount owned, length of credit history, credit mix, new credit. Credit needs to be managed correctly, meaning pay off entire balance every month or keep credit utilization ratio to minimum. Another area of personal finance is insurance. Personal protection refers to a wide range of products which can be used to guard against unforeseen adverse event. Common protection products are life, health, wealth, vehicle insurance and retirement plan. Other important area is savings and investment. Saving refers to excess cash that is retained for future investing or expense. If there is surplus between what a person earns and what they spend, the difference can be directed towards savings or investments. Managing savings is a critical area of personal finance. Common forms of savings include physical cash, savings bank account, money market securities. Investing relates to the purchase of assets that are expected to generate a rate of return, with the hope that over time the individual will receive back more money than they originally invested. Investing carries risk, and not all assets actually end up producing a positive rate of return. This is where we see relationship between risk and return. Common forms of investing include stock, bond, mutual fund, real estate, private companies, commodity. Talking about investment and savings, let's also understand concept of compounding of interest. For example, if you invest 100 rupees and earn interest of 10 rupees on it, then you reinvest this 110 rupees, you earn interest on this reinvested amount of 110 rupees. So basically you are earning interest on previously earned interest of 10 rupees, and this is compounding of interest. Another area is taxation. One needs to understand the basics of taxation system and how much tax he needs to pay on his earnings, so that he can plan his expenses and understand how much money he is left with. By understanding these basics, one can take advantage of tax deductions and credit available. So understanding taxation is highly important. Thank you.